G'day Fools, Scott Phillips here, the Motley Fool's Chief Investment Officer here in Australia, and welcome to another of our Stocks in Focus. This is a series where we cover the companies you probably own because we are trying to pick the businesses owned by most Australians. They tend to be the largest businesses, not always, but they are at the top end of the ASX market cap tree. The businesses we figure you probably want to hear about. Also, by the way, we cover the companies in the news. And this business we're talking about this week covers both of those grounds beautifully. Now, of course, you know who I am. You may not know one of the best and brightest young analysts in the business, Benny O, who is a newish Motley Fool employee. Been around for a few months now, mate. Welcome to Stocks in Focus. Thanks for joining me.
G'day, Scott. Thanks for having me.
Now, mate, as I said, you are one of the best and brightest in the business. I know you will do a wonderful job of talking about, frankly, one of the companies that, I don't know, I was going to say one of the most impacted businesses, but I'm not sure which ones haven't been impacted by COVID. Maybe Telstra and maybe, I don't know, maybe the banks, but everyone's been hit from pillar to post or has done remarkably well through COVID. It's one of those businesses pandemics that's left no business untouched or almost no business untouched. Plenty of winners, plenty of losers. I'm going to assume Webjet's on the other side, the losing side of this particular list. I know for a fact they had to raise some capital because I'm a shareholder. Unfortunately, I bought, too early, put it that way. I figured, how bad can this COVID thing be? Yeah, that was a mistake. That was in February of last year, and I've been paying for it ever since, mate. So I'm glad you're here to describe to me exactly how I've gone wrong, but also update us on where the business has been since and where it sits today. So tell us the Webjet story, mate. Describe the business for us, and then give us a sense of what the last 12, 18 months has done to the business of Webjet.
Sure. I think you said it very clearly, Scott. I think the travel and the tourism industry has been one of the most, if not the most, severely impacted sectors in the last 12 to 18 months. So while Webjet is a pure digital online travel business, it's no different. It's been impacted just as bad. So if I take it on a very high level, going back, it was established in 1998 and it was listed on the ASX in 2000. I believe it was via a reverse takeover deal of a mining explorer company. And so at that time, I think 6 months after that, they renamed themselves to Webjet from the mining company. And from then on, they started as a leading online travel agency. And that's predominantly focused on your retail markets, so your consumers and your mum and dads, for instance. But it's also pivoted and it's acquired a lot of different companies along the way. And they're now focusing on their business-to-business travel solution provider. So if I take a bit back as well and dive into these two divisions, the first division is what I mentioned about is their business to consumer travel agency. And so that encompasses two divisions or two businesses. Firstly, you've got the website, the main website, webjet.com.au. This is the all-in-one website platform for traveling. So you can book, mix and match your flights, but also you can combine your holiday packages, think of your hotel accommodation, think about your car hire and your travel insurance. But this is also based in Australia and New Zealand. But if I think about the other section, the Online Republic, it's also part of your business to consumer market, but it's a travel booking platform that specializes in think about your motorhomes and your car hires. And this traditionally based in New Zealand. So that's one section of it, the business to consumer. But now they've also moved into this thing called B2B, which is business to business. And this is the Webjet business. Webjet is like, think about a bed bank. And what that means is it's an online intermediary between your hotel suppliers, so those who are trying to fill those hotel rooms, to those in a wider travel industry who are looking to, I guess, book those rooms for their end consumers. And so Webjet, their platform, is providing that through their online connectivity and these websites to provide them a range of hotel inventory, and that's at the lowest price possible. I do mention this part of the business, the B2B business, it is a global business. So it's got global operations in Asia Pacific. It's got global operations in the Americas, Middle East, Europe. So their key strength there is their geographical diversification. And so if I was to bring it back in the last 12 to 18 months, the business has actually pivoted to focus on this section of the business, which is going to be their core driver going down the track. So while Australia, we've been in lockdown, basically in Australia and New Zealand, for instance, they've been actually generating some bookings and revenues through, I guess, North America and European summer holiday travels. So that's been a very good play for them. And so it's a positive side of the recovery picking up. And most recently, they provided a trading update. And that highlighted a lot of these, I guess, positive recovery story. But it's also revealed that Webjet is actually potentially going to be cash flow positive for the first half of financial year 22. And that's largely driven from this business that I just talked about, the Webbeds business. And so they've seen really good improvements, and it's been profitable, I guess, I think it was July, August, September. Sorry, it's expected to be profitable in September. And so I guess this was largely driven from the European and North American summer holiday travels where you see travel restrictions easing. But if I was to put it back into the negative side, on their travel agency, online travel agency, it's actually been less positive because given the recent domestic travel incidents in Australia. And so it was profitable between April to July, but that streak has actually ended recently. But that's a bit of an overview of the company.
No, I like it, mate. It's a really solid overview. A couple of lessons there too, I think, for our viewers as they think about this. If someone said Webjet, the business, you think of Webjet, the website, and that's completely reasonable, right? The business is named after the website or vice versa. And yet there is so much more to Webjet, the business, than just the website. So a reminder to look a little bit below the surface. Not so much the case anymore, but it's a bit like the old Woolworths, where it's Woolworths, but there's Big W, and it was originally the liquor business and other things as well. Just got to remember to look just below the surface of what immediately comes to mind. The other one I think too is that being in Australia and frankly being in lockdown right now, as I am, as you are, it's also worth remembering that there is a bigger world out there. Of course, we know that, but if you think about again the Webjet business, firstly, it's not just Webjet. Secondly, the Webbeds business, as you say, that B2B business is a global business, and so while we're locked down and we're going through a certain set of experiences right now, the rest of the world's in different shape, and it is a reminder that again, just getting out of our own heads a little bit. We can all do it with a bit of escapism right now, mates. We can't do it literally, so we can do it metaphorically. There is some sense of just remembering that these businesses are often bigger and more different. The company's run by John Gusick as well, who I think is one of the more impressive CEOs. He's certainly an iconoclast in himself. He's a man that you don't forget very quickly, but he's done a really good job, as you say, of buying businesses over time. It wouldn't have been that surprising to see Webjet today be still just webjet.com.au, the business, had they not gone a bit further afield. They bought and sold the Zuji business in Asia, of course, in the past. This Webbeds business, they've almost built from, I won't say from scratch, but they pretty much, I think they built a business or bought a business that was Middle East only from memory. And they've kind of built this multinational, multi-region business from that. So it does remind you that not only is the business important, but the management team behind that company. And if a different management team had run Webjet for the last 2, 3, 5 years, it may have been a very, very different business today. Am I right that Webbeds is, I want to say, like the third or fourth biggest hotel room aggregator in the world? I mean, it's a distant third or fourth behind some of the big guys in the room. But this is a really, really big global business, and Webbeds, and obviously part of Webjet, one of the biggest in the space. So a reminder that when we talk about hotel bed aggregation, we're not just talking about kind of Australia, just New Zealand, or even when we think about it being global. I mean, there's plenty of them, but when you're the number 3 or 4 in that space, it's a pretty good position to be in.
In fact, Scott, it's actually number 2. So I think it's got 4%
Oh, wow. There you
of
go.
the bed bank market. So the first one, the main play is hotel beds,
Yes.
and they're leading it by I think 13% in the total market share. So
Right.
Just a bit of comparison there. Webbeds has around 365,000 hotel suppliers, and approximately around 10% of that is contracted directly. So they've got a direct relationship with them.
Wow. Okay.
And so hotel beds, the main player, they've actually got less than that, 165,000 hotel suppliers. But the majority of these actually, they've got more direct relationships with them. So I got to put a distinction there that with the direct relationship, there is higher margin, there is greater flexibility with pricing power. So I think that's something to note. The management has actually quoted or claims to try to achieve its ambition to be the number 1 B2B player globally. So there's a lot of, I guess, runway ahead for them. And I guess it's a bit ambitious as well. So John Gusick has been there for, I think, 10 years as a managing director. So he's done quite well. But going back to, I think, we were talking about the overview of the company, I forgot to mention that they've actually had 3 capital raisings in the last, I
Yeah.
guess, since the pandemic. So,
That's been
so
messy.
the first one, yeah, the first one was in April, I believe,
Hmm.
of last
Hmm.
year, and that raised around $300 million. It was a 1-for-1 equity share, and
Yeah.
so that did dilute some of the shareholders' interests. And then thereafter, that was supposed to last until I think the end of the year, but in July last year they came up with another raising, but this was a convertible note,
Mm.
and that was in the European market, and I think that equated back to Australian dollars around 163 million. Um, and then this year they've raised another convertible note, and that's in the 100 million range as well. So there has been a lot of capital raisings, and there has a bit of dilution in the shareholders holding.
I know that personally, Benny. Can I tell you? I've felt each one of those very keenly. And look, it's a reminder too. As you raise it, it's a good point for us to do a little bit of education for our viewers. When you look at the Webjet share price, it's tempting to look at today's share price and look at last year's share price, last January or February, and do that comparison as if those are kind of the same thing, and they are per share. But remember, if there's 1-for-1, as Benny said, effectively they've doubled the share count. So while if the share price is half today as what it was then, it's effectively the same market cap, close enough too. There are some rounding errors, but let's call it that. In other words, just getting back to half of that price would get the whole company back to the same value. So if you're thinking about how long does it take to get back to the previous price to get to the same 1-for-1 share price, it's actually going to double its market value. So that's the damage that a capital raising can do, particularly one that was, look, I don't blame the company for doing it, mate. No one expected the pandemic. You get to a position where it's raise capital or die, so you do what you have to do. Even though I suffered from that one personally, no one predicted the pandemic. You couldn't have foreseen it. And, trying to run a business, maybe in hindsight, they might have chosen to have a little less debt, a little more cash. They may have done things differently or not. But it is a reminder that, as Warren Buffett says, you never want to rely on the kindness of strangers. And the kindness of strangers this time cost Webjet shareholders very meaningfully. We lost about half of our company to the new shareholders who bought at that time for exactly that reason. You just simply didn't have the ability to get through without that capital raising. So just remember, when you look at the share price, don't say, well, it's already half the price. When it gets back to that level, hold up on my money. That's true. But getting back to that level actually means the company itself needs to be twice as big, not just back to the original size. So it's worth keeping that in mind as well, right?
No, well said. I think, like you said, it's doubled the share count on the register. But if I give another insight there, in the last 4 years, it's actually tripled. So I think
Oh,
that's a
wow.
consideration that investors have to take in consideration. One thing I like to add to that as
Mm-hmm.
well, like about the recent results that came out and their trading update, it's that while yes, the capital raising was necessary and everything, they've actually done things internally to try to, I guess, transform the business so it'd be ready once the
Right.
international markets open. So they're doing things like streamlining the processes. They're putting a lot of
Mm-hmm.
investments into technology. There has been some headcount reduction there, but they're just trying to simplify the business. And the aim here is actually to deliver around at least 20% cost efficiency, and that's when it gets back
Mm-hmm.
at scale. So that's a pro in the sense that once the market opens, once it gets to the scale, there might be a bit more profitability down the track.
I hope so for my sake. It is. I mean, a couple of things. Firstly, you never want to waste a crisis, right? As the old cliche goes. So at least they're there working hard. The other thing is really hard if you're burning cash as Webjet has been for most of the last 18 months, as you say, periods when they were making some money, particularly when domestic travel in Australia was back to normal for a few months. It's hard to try and work out how ready you want to be for the reopening, right? You don't want to burn cash keeping costs high. On the other hand, you don't want to have so little in the way of staff and business momentum and advertising and relationships that you got to start rebuilding from scratch once they reopen. I've got to say, in this context, I'm glad it's John Gusick and not me, because I don't really have a strong view of even what I would do in those circumstances. Do I keep my costs up, cop the cash burn, but be ready to hit the line really hard as soon as we reopen, or do you say I'm going to be conservative? Yeah, the reopen might take a bit longer than I otherwise thought. It's almost an allegory for the old gyro Australian economy, right? How much stimulus do you put in? How much debt do you incur? Versus how much do you let work under its own steam? That's a whole different conversation, mate. Let's move ourselves to the investment case. So we talked about the business, and you've done a great job. This is our viewers. I told you that he was a smart guy. He's picked me up on a couple of key stats. So thank you, Benny.
You're too nice,
Let's
Scott.
go to. No, mate, viewers heard it. You number 2 in the market. You talked about the cash burn. Look, this is where we're at. The past is the past. I frankly wish I could go back and change things, but I can't. I own Webjet shares. So let's go through the investment case. And when I say own them, by the way, that's not to say you should have one view or the other. I want you to convince me that I've done a great thing keeping those shares. So give me the bull case, and then I'll ask you to convince me to get rid of those shares, and we'll see how that balances out. So, mate, if you're in Team Webjet right now, what are the key investment theses? What are the key reasons you might want to buy Webjet shares on the market today?
Probably think of four main points. And firstly, I'll probably point towards the pent-up demand for domestic leisure travel and international travel.
Yes.
Quoting one of my colleagues, Drew Flowers, he said that the world could be ending and people would still be traveling. So think about
That's true.
the natural disasters in Japan or Chernobyl,
Yeah.
and people are still traveling to
Yeah.
these places, even after these
Yep.
cases. So travel is at the top of everyone's list once these, I guess, when this COVID's over. But if
Right.
I look at through domestically and internationally, domestically we've seen signs of domestic travel when interstate borders have actually been lifted. So I give an instance with the Webjet online travel agency, their booking spiked. So that was between January to July, and I did mention that they're profitable from it was April to July this year. So this suggests that when state borders do reopen again, domestic travel will rebound slowly. And they also claim to be the number one online travel agency in Australia and New Zealand. And
Okay.
after doing a bit of research online and looking at some online travel data, such as your Google Trends and your SimilarWeb, you notice that you saw a lot of data that point towards Webjet having more website traffic than your closest peer, like Flight Centre, for instance. And from memory, it was around 30% more. And so, and this is reinforced from management, who said that they actually outperforming the market in terms of the online travel agency by around 1.6 times. So those are very good points to point towards. Also, the point that domestically is more likely to hurt. You're more likely to see a domestic-led recovery than international. I think there was a stat about how Australians spend more overseas than international tourists spend in Australia. So we'll likely see a large portion of that planned spend internationally stay domestically. And I did mention that Webjet has been from global to be a more geographic diversification and having that domestic focus. But not only that, internationally, if that does open, Webjet does still benefit from the B2B business, Webbeds. In fact, I mentioned it before, the trading update, where they actually benefited from the North American and European summer holiday travels. And so travel restrictions were eased there. So they've seen that uptake when international borders do open. If I move to a second point, I like to say that Webjet's actually in a good position to benefit from the kind of structural shift from offline to online travel booking. Prior to the pandemic, we've already seen this increasing trend where more and more people were booking trips themselves online rather than actually going to a full service brick and mortars travel agency. And so given that Webjet has been in that position and they are the number one online travel agency online, they may be able to take more market share in this space as these structural trends continue. And so I mentioned about those 20% operational efficiencies. Once it gets to that kind of level, this should probably help its profitability grow faster than its revenue. The third point I'd like to make is that it's taken an opportunity to actually enhance its internal operations. And these transformation initiatives will likely create permanent benefits going down the track. And so their post-COVID strategy has been working. They're looking to deliver what's cash flow positive in the first half of financial year 2020. And that kind of gives investors confidence that it may continue down the track. And lastly, I think I'd like to point to their strong cash position. We'll talk about the fundraising and the capital raising that they've been doing in the last 18 months. So I think now they've kind of got cash reserves of around $431 million. And I know you were mentioning about the cash burn. From memory, that was around $5.5 million per month. So if I just did my basic maths, that's giving Webjet a 6.5 year, I guess, capacity runway. So they've got sufficient cash to actually survive the short-term headwinds, like if I must say. But also, you got to take into consideration about the competitive landscape as well. I know that we mentioned early on that the industry, tourism and airlines, they've been severely impacted. So a lot of these companies may not be able to access the capital markets that Webjet and Flight Centre may have. So companies like, I'm not sure if you remember, STA Travel for the student accommodation, they're going to voluntary administration. So that's a competitor that's eliminated, and that's an opportunity for Webjet to actually capture. But only of that, Flight Centre has actually closed, I think, more than 50% of its store networks. So Webjet does have this kind of competitive advantage now, given that they've got this pure online play as well.
Nicely put, mate. A very good summary. Believe it or not, I was a student once. I haven't got much hair anymore, but I do remember STA Travel. I'm pretty sure I actually booked my trip to London through STA, but there we go. Bit of a tangent. All right, you've given me the good oil, mate. I feel good about the Webjet share price. I feel good about the investment. I'm happy I own the shares. Now dash my hopes. Give me the bear case. If you're going to try and talk me out, if you're going to say, Scott, you've got to sell your Webjet shares today, and here's why, what arguments would you line up for me?
Well, the bear case, the elephant in the room, COVID. It's not going anywhere anytime soon.
Yeah, I've heard about that.
So there's still going to be ongoing uncertainty for the foreseeable future. Yeah. So first point I'll probably make, investors dislike uncertainty. So the exact timing and how borders reopen does remain uncertain, especially in Australia. I think currently we've got a third of Australians, 36%, 37%, that have been fully vaccinated with double doses. But the expectation, I think the national plan is 70% by November and 80% by December. But reopening still remains a bit muddy. I still feel there's a bit of uncertainty about when it's going to happen, how it's going to happen, and everything's subject to government decisions and regulatory approvals. But to add to that, Scott, I think, and speaking anecdotally, I think there's been a real loss of optimism and confidence amongst Australians. And the bottom line here is that a lot of them may not trust that even when we get to these 70%, 80% vaccination rates, that the restrictions will be lifted in a meaningful way. So that's something to keep in mind. But secondly, I think we've talked about domestically about Australia reopening, but also there may be a slower than anticipated global recovery in travel. I can probably point to a few points in this section, which means that people may not actually feel comfortable traveling. So they may be delaying traveling, and that will definitely impact Webjet with their bookings and revenues. And also people might see that traveling might be a bit more expensive down the track, or even in near future, because a lot of these airlines and travel agencies need to recover or recoup the lost ground that they've had. Another point to make that is, I think of speaking to a lot of my friends, they may fear that once they leave Australia, that there's a bit of complications coming back. So having all these factors in mind, that could actually delay a lot of the travel plans that people anticipated. And so I know there's a lot of optimism. I know everyone's itching to go, like Drew said, everyone's keen to go internationally, but it might not be the case. I think that's reiterated from several things, like I think South Africa has just recently discovered a new variant. It's called C12, and some have been citing it that it might be more contagious than the Delta variant. And this variant, it's just unknown. It just keeps mutating. So anything can happen. I know that while we mentioned about USA and UK and the countries in Europe, they've been traveling for the summer season. But I think in the UK, there's 35 cases a day. In the US, there's 100,000 cases a day. And so a lot of the hospitality rate or the data has been a bit troubling. So there's still a bit uncertainty there about what's happening afterwards. And in fact, some of the countries in Europe have actually banned tourists from traveling from USA to these European countries. So it's a moving part there, and anything can actually change. And so the global recovery might actually take slower than people expected. Another point I'd like to make is there may be extra competition coming into the online travel booking space or even the bed bank space. I mentioned that travel and tourism, it is a big industry. And so it's also attracting a lot of, competition because it's such a lucrative industry. And so you got companies like Google, for instance. It's almost $2 trillion company. It's got significant resources, and it's got its own travel booking feature already embedded, and you can't discount that because I think with such a big company, they can actually take some market share from these players, especially Webjet. But also, I think there's also people who might look to book through other competitors that provide better value, for instance, or even book direct at these airlines or these hotel chains. So that's a key risk, I think, that a lot of people have to consider. So those are my take for the bear market.
Mate, when you were going through the bull, when you go through the bull case, I was like, yeah, you're right. Yeah, I'm a genius for holding my Webjet shares, and now I'm kind of a little bit unhappy. I'm gonna try and bring them back a little bit. Now, what I will say is, firstly, just for all of our viewers, we can't give you personal advice. This is general advice only. This is our view of the company. Whether it's right for you, whether you should buy the shares or not, is completely your decision, and you should seek financial advice if you want help with that. We can't do that. Secondly, we're recording this on the 7th of September, so anything can change from this point forward, especially in this very volatile space. So again, we don't expect huge changes, or we'd already have talked about them, but it's just worth remembering that we are recording this knowing what we know now with the price that it trades for now in today's circumstances. So again, please have a think about that, whether that's appropriate if you're looking at this for a week, a month, a year. Maybe you can look back and see how smart Benny is and how silly I was, or vice versa. I doubt it, and try and draw some conclusions from that. But in the meantime, just remember we're date snapping. This is 7th of September 2021, and things will change. All right, mate. Tin tax time. Look out 5 years for me. Short term is short term. We're long term investors at the Motley Fool, so we don't really care what happens in the short term. But if you look out 5-ish years, do you reckon Webjet's a market beater from the current price, or am I destined to rue my Webjet shareholding?
That's a very good question, Scott. I have been thinking about this.
Good, thank you.
While I do believe,
I don't know the answer, by the way, viewers. I'm asking Benny for the first time, so I have literally no idea what he's going to say. So let's see what it is.
Well, while I do believe that the travel sector may return sometime in the distant future, and Webjet is in a fairly good position to benefit from this, I think there's still a lot of ongoing uncertainty. And at the current share price, my expectation is probably it's unlikely to be market beating in the next 3 to 5 years. I could probably point to a few reasons behind that, but it's actually been severely impacted. So I know they've raised a lot of money, but with these convertible notes, they actually convert into additional shares. So that's increasing the share count. We already mentioned how it's already doubled the count already. So that's already impacting or diluting shareholders. So I think that's a consider investors have to take in mind, especially at the current share price. It doesn't seem as favorable. It's baking in a large portion of, I guess, global recovery and future growth, likely out to probably FY financial year 24. And that's, I'm not sure, may or may not actually eventuate. So that's a big if there. So I think there's a lot of uncertainty at play. And I think there's going to be a softer global recovery, in my honest opinion. But I guess overall, just to put it back together, there's heaps of uncertainty. There's a lot of headwinds. It's likely to experience continued volatility. And I personally think there's better market beating opportunities out there at the moment. And I'm more than happy to keep this on my watch list and see clear signs of sustainable growth or business performance before actually jumping in.
There you go, fools. You've heard it from Benny himself. Much to my chagrin, Benny has determined, he's probably right, that the Webjet share price might be one that might struggle to outperform the market over the next 3 to 5 years and beyond. As always, there's chances it goes either way, but Benny's given a really, really thorough summary of the business. And if you like to weigh up the pros and cons for yourself, he's done that, as well as giving you his considered opinion as to what's next for the Webjet share price, at least over the long term. Again, we make no short-term promises. Volatility will always be with us. The shares could fall and rise, or rise then fall, or both, or all three combined, and that's just life in the market. There you go, fools. Webjet from the mouth of Benny O. Benny, thank you for your expert analysis and opinion. Really appreciate your time.
Thanks for having me. Appreciate it, John.
And fools, thanks for watching. Until next time, until the next Stock in Focus, or by the way, one of our other YouTube series. We've got Stock of the Week. We've got our favorite investing books. We've got this series. We've got all our media appearances. Make sure you check that out. Make sure you do like and subscribe to the channel. Hit that notification bell so you get a little notification whenever new content gets put up. You don't want to miss Benny's next appearance. You don't want to miss the next Stock of the Week out on Wednesday. No names, no pack drill, but make sure you're listening for that one, because they are our buy recommendations from Motley Fool Services, by the way. Free to you via YouTube. You want to check that one out. Benny, are you on Twitter by chance or any of the socials?
Not actively, but that might soon
Not
change.
actively. There you go. That's my 21. I've got a few of you to convert, Benny. I've got to get the team on Twitter eventually. If you are looking for a bit of social media love from the Motley Fool, you can jump onto Twitter or Instagram. The Motley Fool's account is the same handle on both. It's at the Motley Fool AU. You can follow me on both at TMF, that's the Motley Fool, of course, at TMF Scott P. You can get us on Facebook. I'm Scott Phillips Money, where you get the Motley Fool at the Motley Fool Australia. And of course, we have 2 podcasts you should subscribe to, Motley Fool Money and The Good Oil with Scott Phillips. They're both available on, well, where all good podcasts are sold, as they say, on any podcast platform from our good friends at Listener. There you go. There's the ads done. Follow us. Why not? What do you got to lose? You might just learn something. You might get some free content. And hey, that's hard to come by these days. So there you go. Some free quality content from the Motley Fool, including the likes of Benny and this Webjet summary. Until next time, Fool on.